So let's talk about what we're here to do today. And it all starts with what I have learned about rental property investors over the years here. Again, we've been in business since 2006. I've had the pleasure of speaking with thousands of investors, some that we serve as clients and some that I've been able to speak with at various conferences and just over the phone. And what I have learned about rental property investors is that they have no clue what to do with this thing called home price appreciation. It's like it is so easy to evaluate a rental property based on the rental income that comes in and to look at the expenses that are a part of the investment, that becomes the sole basis for the decision to invest. Which is interesting because if you actually break down the return on investment of a rental property after a hold period of 10 years, 20 years, 30 years, a very long-term hold period, the biggest component of your returns is not that cash flow. Now, cash flow is important, but if you look at the biggest component of your returns over the long haul, it's not the cash flow. It's the home price appreciation, right? But us as investors, we're a little bit scared because we saw what happened in 2008 and we're a little bit concerned. But the biggest thing is we don't know how to evaluate home price appreciation. So what we do is we just ignore it. But I'm here to tell you that that is the wrong approach. And the reason that's the wrong approach is because if you make your decisions solely based on cash flows and you ignore these other profit centers like tax savings and principal pay down and home price appreciation, you run the risk of costing yourself literally hundreds of thousands of dollars of lost opportunity returns that you won't earn simply because you didn't delve far enough to understand when you can count on home price appreciation. And so that is what we're going to focus on today. I'm going to arm you with the information so that you can go out and make the best decision for yourself, looking at all the facts, looking at cash flows, which I think are incredibly important. I don't want to minimize the effect of positive cash flow. That is crucial, but that's not the only thing to look at. We're going to look at specifically home price appreciation today. All sound good? Great.